I think the people who are getting screwed over the most in the current system are the ones that will benefit the most. My background is in strategy consulting. I worked with large international consultancies. I also worked in corporate strategy at very large international businesses here in Europe. But the right thing, I think, right now is actually, no, we need to kind of like suck the unproductive capital out of the system and put it into Bitcoin. If you were to invest in a gold mining stock today or something, and they continue doing what they're doing, it's not going to beat Bitcoin. And that's what makes it exciting, right? Because this is not going to be an instantaneous shift. It's going to be a gradual one. To be that guy who had lost a pile of Bitcoin after being like evangelizing it for a number of years, right? So it was a bit more of that kind of identity issue in my case that really, is this something I want to associate my identity with? And then you realize over time that it's gotten so big, so decentralized, so broadly accepted that it's not really stoppable in a way. But I think definitely the direction of travel right now, I believe, is that retail, everyday people are going to get their Bitcoin exposure without them even really knowing it.
And before we get started with all the topics, maybe give the viewers and the listeners that haven't come across your content or haven't seen the first episode of us a quick overview of like who you are, what you're doing, and especially why you're excited about Bitcoin.
Yeah, certainly. So I think last time I was on your show was around late December of 2024, last year. And at that time, I was still in a Fiat job, hadn't really broken free at that point in time, but I was definitely considering it. My background is that I am Canadian. I've been living in Europe for over 13 years now. I'm based here in Copenhagen, Denmark. And my background is in strategy consulting. I worked with large international consultancies. I also worked in corporate strategy at very large international businesses here in Europe. And I've been into Bitcoin since 2013. Late 2012, early 2013, while I was living in Berlin. Was fascinated by it, bought into the long-term, the ethos and the long-term vision, but failed to kind of self-custody in the right way. I was with Mt. Gox, and I was a victim of the Mt. Gox hack. So that kind of put me back on the sidelines for a few years, but starting in 2017, started kind of building conviction and getting deeper into the Bitcoin space again from that point forward. And I'd say for the last 3 or 4 years, it's just been kind of all I think about again, all I talk about, and decided earlier this year to start my own business in this space. So in April of 2025, I founded Orange Wheel, which was initially just myself as an independent consultant focusing on bringing Bitcoin strategies to the corporate landscape. I've since been joined by a few colleagues, and it's been very exciting. No regrets in terms of that decision. It's been a lot of fun. I've been focusing also on getting to lots of conferences. So I actually had the privilege of meeting you in person, coincidentally, at the hotel in Prague last month. You are definitely taller in person than you seem. So that was a bit of a shock. But no, it's been great. I've been to Prague. I've been to Cheat Code in the UK. I've been to Strategy in Orlando, picked up this nice mug while I was there. So really trying to get primarily into, the Bitcoin space, but more specifically into the corporate adoption of Bitcoin arena. So kind of having one world in the Bitcoin space and also having another foot in the kind of traditional corporate strategy world, and trying to kind of bridge those two communities together in a certain way.
Yeah, I do my best to communicate that I'm tall now, so I hope that people are no longer surprised. But I think you have a long way to do on the marketing side, that actually people are like, oh yeah, you're actually tall. But besides from that, it's super interesting also from Mt. Gox, and I think you don't get enough like people that lost a lot of Bitcoin or like get screwed over early on. They don't get enough credit for like getting back into Bitcoin, because there are a lot of people that kind of lost Bitcoin or they kind of got screwed over, and there was a lot of scams. There's still a lot of scams with Bitcoin going on. And if you have the first touch point with, I don't know, a scam, a rug pull, or like Mt. Gox and all those things, you kind of you have a harder way to coming back in. And you kind of have to jump over that of like, oh yeah, like this was the one thing, and Bitcoin is the separate thing. It's not FTX, it's not Celsius, it's not Mt. Gox. Bitcoin is a protocol, and you kind of have to separate that from that. So that big kudos to you. Like, I think a lot of people are still on the sidelines that say, I got screwed over. Like, fuck that shit.
Yeah, and I think definitely in my mind, I knew that I didn't conflict the Bitcoin from the intermediary. I mean, I understood that issue. I think from my personal perspective, it was more just my own identity had been kind of locked in with this, and then had been kind of humiliated, right? So it was kind of like to be that guy who had lost a pile of Bitcoin after being like evangelizing it for a number of years, right? So it was a bit more of that kind of identity issue in my case, that really is this something I want to associate my identity with, given this event in the past. I think that's really what, and the humiliation and a bit of shame that went along with that, as opposed to really the lack of understanding about where the failure was in the system. Yeah.
I think it's a thing that we can look at something to be proud of. Actually, it's like that ego death that you come over with and you learn something. I mean, of course, it's better to not lose your Bitcoin and actually not do this. But I think early on, like I haven't talked with anyone. I mean, maybe they also make it up, but I haven't talked with anyone that went into Bitcoin early on. Let's say before, like, I don't know, 2019, 18, 17, something like that, before those eras, and they haven't lost any of their Bitcoin. Like most of them have lost some, and it's almost inevitable. I feel like.
Yeah, it's a rite of passage almost, right? I think you have to kind of take some pain and damage and learn your lessons the hard way to really become a firm, like, believer in a way. So
what is actually what made you actually like? Was there a point where Bitcoin was so, like, there was a point or like a story or like a thing that you've learned that you're like, oh shit, I really have to learn this thing harder, and you made you really go all in, that made you really serious about Bitcoin? Was there something that you like, okay, that's it? Or was it just like over time that kind of got you to be a firm believer?
I think what it was is early on in 2012, 2013, when I first discovered and got into it, it was always this kind of understanding that our current system is flawed in a way, but it was always more hypothetical that at some point it was going to end. It was always like a bit more of a dream, that this could in some potential future overtake fiat, right? But I think what has happened just gradually through time is you realize, yes, the current system is super fragile. It's reaching its like endpoint. You can see it kind of unraveling, and the problems it's facing in so many different dimensions, and the fact that Bitcoin continued to grow and develop despite all the animosity and attacks and everything, right? So I think that at a certain point it just became, okay, this is not just a hypothetical thing. This is actually a thing that is definitely going to happen in our lifetimes, and it's not only going to happen, it is happening, right? It's a bit more like we are actually within the process itself. And also the kind of the unstoppability aspect of it, right? The fact that, there's always those potential cases of like governments coordinating to stop it, hijacking the mining infrastructure, co-opting the system. And then you realize over time that, it's gotten so big, so decentralized, so broadly accepted that it's not really stoppable in a way. And even like what we're seeing now with, governments and corporations adopting it. I know some maxis are kind of like, well, this is like, they're co-opting the system that goes against the ethos of what Bitcoin stands for. And from my perspective, no, this is exactly how Bitcoin wins, is through integration with the existing system. And then that's how the value and wealth is transferred from one system to the others, through this kind of like interesting kind of yin yang, symbiosis almost.
It's an interesting thing where when we have the, let's say, treasury companies, the ETF, the financial products on top of Bitcoin, basically, and let's say just Bitcoin financial IOUs that you can have, and it is something there where a lot of people actually go in and say like, hey, like that's actually something where I can accumulate more Bitcoin over time because it's faster than Bitcoin, or I can buy in because my retirement account doesn't allow me to buy direct Bitcoin, so I have that exposure. So there are many different reasons why people buy it. But it's an interesting discussion of like, is it a Trojan horse for Bitcoin in the sense where they're trying to get people out of self-custody and into these products? Or is it maybe even the other way around, where it's kind of a gateway drug to Bitcoin for the financial system, which you can make the case for both sides. I think Bitcoin is strong enough to be a gateway drug for everyone, and it's a natural progress. But how do you look at those opposing views?
Yeah, I think they're both right, to be honest. I mean, I think there's, and again, that yin yang kind of metaphor maybe is a good one, but like, I think there's going to be a lot of people who get their first exposure to Bitcoin by way of these proxy instruments. So it is that kind of gateway drug, and some people are also going to come in through stable coins and other ways in, right? So I certainly believe in that. I think on the other side, it's the only major risk I see is, again, we're introducing counterparties, and you're, again, trusting your kind of, in a way, trusting your keys with somebody else. And these also become pretty large honeypots, right? The Coinbase custody, I mean, they seem to custody all the major ETFs besides Fidelity. MicroStrategy, I'm sure they're using multiple different custodian solutions, but still, it's so much Bitcoin that each individual custodian is probably a pretty large honeypot unto itself. And of course, in a certain crazy situation like the 6102, it could be that the government goes to Michael Saylor or to Coinbase, to Brian Armstrong, and says, listen, we have to confiscate the Bitcoin, right? So those are all new risk factors that are introduced, but there's inherently going to be that trade-off between, the ability to the advantages that come through, I guess, more widespread access, and the downside of then introducing counterparty risks that are associated with that.
Interesting. What's your overall take on Bitcoin Treasury companies and the corporate adoption? It seems to have started obviously with Seyr in 2020 and really got going, I would say, around a year ago, where it really kind of accelerated and was in the public eye, in the Bitcoin public eye, I would say. So what's your take on that?
Yeah, it's fascinating. I mean, I think the MicroStrategy story is one that's fascinating. I think Seyr himself has been kind of evolving his thinking through time as well. I do believe, early on in 2020, 2021, it was more of a arbitrage on the fact that there wasn't an ETF available on US exchanges at that time. But then when the ETFs became accessible, he kind of leveled up and found new additional ways to differentiate by means of financial engineering. And I think the great lesson that sort of came out of this is the idea that, he was in a position that I think many companies find themselves in business leaders find themselves in, where they work themselves to death trying to find a way to kind of generate positive real returns for their business, and struggle and just cannot really do it, right? And I think that's systemic. That's a systemic issue that's a result of the manipulated financial markets through central banks manipulating the cost of capital and suppressing it lower and lower to be able to try to stimulate additional growth, which is necessitated by our kind of debt-based monetary system. We can definitely go into that, but I think as a result, you have a lot of companies that are really not necessarily, or really, really struggling just to kind of stay still because, and there's many even more companies that are like failing to deliver real value in real terms. And Bitcoin kind of comes in and shows, okay, this is actually the true cost of capital now. And I think it's just super cool that there's now this incentive for all different kind of capital allocators to allocate capital to Bitcoin, and in a way that makes Bitcoin stronger, but it also is like kind of resolving the issue that we're kind of seeing in our system, where capital is otherwise being put towards value destroying instruments and purposes. Okay, so I went on a little bit of a thing there, but then Bitcoin Treasury companies. It's the first instance where we really saw corporations, I guess is what I'm trying to say, is like corporations reallocating capital towards this. And there's kind of opens up people's eyes in terms of this new phrase that's kind of permeating, being like Bitcoin is the hurdle rate. And, what does that really mean in real practical implications? Now, I think most of the corporate world hasn't really yet picked up on the huge implications of what that really would portend for all corporations and all capital allocators. But to kind of take a step back, where I think most of the world is at, is they're just seeing, okay, if we kind of replicate the MicroStrategy playbook in our own respective capital markets, we too can see stock prices go up and, at least for a period of time, beat Bitcoin itself through. And I guess, there's lots of different theories as to exactly why that is happening. I think it's a combination of regulatory arbitrage. As we said, certain institutional investors cannot allocate to Bitcoin or Bitcoin ETFs, need to invest them into their domestic markets. There could be tax implications that make it more reasonable for companies to choose that instrument, institutional investors to choose that instrument rather than another. There's also the retail hype that kind of goes into it that also kind of creates additional price action, which then can be used to kind of issue more equity and then acquire more Bitcoin. So it's a fairly complicated financial engineering mechanism, this kind of flywheel that can be generated. My perspective on it is that I think this is a moment in time where they're providing a purpose, a function in a certain way, where they're kind of acting as vessels for taking kind of trapped capital and getting it indirect exposure to Bitcoin within their respective capital markets. But at some point, these regulatory arbitrages will diminish, and the speculative fervor from the retail community will also we're already seeing it, I think, being diluted across all these different Bitcoin Treasury companies. So becoming a little bit like shitcoins in that regard, right? Where people can kind of jump from one to the other, try to catch the spike, then pull out. So I think this flywheel, as interesting as it is, and I think it's valuable as a sort of service that they are providing, I don't think they're going to be in perpetually able to beat the Bitcoin hurdle rate, at least not kind of all of them, unless I think there's some wild cards in here, right? Unless they can kind of develop some financial type services around Bitcoin. But then you're introducing kind of fiat type risks again, right? Like in the Bitcoin lending services and these sorts of things. So again, I think it's a valuable phase. I don't think this is. I think what I hope the risk is that does not happen is that people see this big bubble forming, and then a kind of a crash in the stock prices of these Bitcoin treasury companies, quote unquote, and then feel like, okay, corporate adoption of Bitcoin just doesn't make sense. It was a big bubble, and now it's popped, right? Because I think the more interesting story, or maybe not more interesting, but the more broad story, I think is going to come after that, where every company ultimately becomes a Bitcoin treasury company, but accumulates Bitcoin through its own operations and through value delivering functions or operations or activities, economic activities that deliver value for the equity holders, not exclusively through financial engineering and kind of playing the stock market, right? So it's very fascinating. It's I think this is all part of what I kind of call the monetary transition that we're living through, kind of moving from fiat to Bitcoin as the fundamental monetary base layer. And I think once we're on the Bitcoin standard, it's going to be great, but it's also going to be kind of boring. I think we're going to know how it works. It's actually going to be a very much cleaner, simpler type of economics that will work. We won't have to deal with nominal interest rates, real interest rates, all this sort of stuff. It'll simply be, if you can get more Bitcoin out than you put in, it's a positive economic value adding activity, right? But moving from the current system to the new system is when I think things are very just fascinating in that change of regimes. And you see it in physics too, right? When you kind of move from laminar flow to turbulent flow, you have that transition period where things are really chaotic and unpredictable. And I think that's what's going to make, the time we're living in now in the next 20, 30 years, particularly interesting. And there's a lot that goes into it. We're going to see this we're already seeing this kind of arbitrage between the fiat system. People who kind of are already moved into thinking on a Bitcoin standard from an investor perspective are able to basically short the fiat system and long the Bitcoin system. And it's just super exciting to see how it's playing out. And I used to think that I always have these kind of fears that maybe the transition will happen too rapidly. Maybe there'll be a point in time where everybody wakes up and wants to get Bitcoin, and then Bitcoin price just skyrockets, and it's just panic and chaos and pandemonium. But the more I've kind of been investigating it and talking to people who are in the kind of more traditional financial world, I'm more convinced now that it's going to be a fairly gradual transition from one to the other. I think there's going to be older people in general as well who still just want yield in fiat. And eventually that generation will kind of die out, but at least for the time being, they're much more comfortable in getting that. And then as long as there's enough people who still want fiat yield, there's going to be demand for somebody willing to take that other trade, who's basically going long the fiat system and getting whatever it is, 5, 6, 7, 8, 9, 10% out in fiat, and that capital can then be reallocated to Bitcoin. So I think sorry, I've kind of rambled on for a while, but but I think where some Bitcoiners, where I get a little bit maybe divergent views from them, is that I think, and I think Michael Seyr also falls into this camp, right, where they're kind of like, there will always be fiat there to play this arbitrage, and I think ultimately it will close. We will be on a Bitcoin standard. Nobody will really want to accept fiat unless governments coerce them to do so. But what that will also imply is I don't think there's any real way to kind of get yield. I think so much of our current system is based on, the fact that there's new units being created enables the ability to have kind of like just living off of, investment income. I don't think that's going to be as easy to do once we're on a Bitcoin standard, because like Bitcoin's finite. It will take real economic value-adding activities to be able to, procure more Bitcoin than you put into the system. So things like money market funds, I think a lot of things that are just purely yield generating, there'll be less of that. But on the other hand, folks will increase their purchasing power simply by holding Bitcoin. So just moving from that mindset shift from wanting to see the number go up and to kind of get like, a percentage increase in your stack of fiat every year, versus actually seeing, to a certain extent, you have to actually see your Bitcoin number go down if you're retired and you're living off your stack. But your purchasing power is maintaining the same or probably even growing, even, depending on how much you're spending to maintain your lifestyle. So I think it's a huge like shift we're going to have to go through, but it's going to take us, a couple decades to kind of get there. And we're going to kind of see different investor segments. I just put it this way, gradually more investors and more stewards of capital will move into the Bitcoin standard way of thinking. But I don't see it happening as a switch going on and off. It's going to be a kind of gradual transition.
It's interesting. And there was a lot in there, but I want to start off with a very important digestion that you made, a difference between Bitcoin companies that just put their Bitcoin on the balance sheet just to have Bitcoin on the balance sheet, which I think every company will be at some point. And then there's also this financial games that you can play on top of the stock market, the equity market, bond market, fixed income, all of those kind of markets where you can play into those and play fiat games to get more Bitcoin. So those are generally two main differences. And I think there are some people that kind of criticize treasury companies, and those are usually on that side, they play the fiat games. I think no Bitcoiner would oppose a company holding Bitcoin instead of US dollars. I don't know how you can logically be a Bitcoin maxi and argue against a corporation holding Bitcoin versus US dollar. I don't see that. So if we think about financial services, or if we think about, okay, how can a company accumulate more Bitcoin over time without fiat games, and then with that basically outperforming Bitcoin, it's very easy. You just have to set Bitcoin as your standard and set that as your treasury. And then on top of that, you provide services or products profitably. And then you can get more Bitcoin because you get paid for your products and services. The same way that I am, as an individual, outperforming Bitcoin every year. Because every month I get a little bit more Satoshis for the work I'm doing. And I also save everything in Bitcoin. So my purchasing power grows faster than the purchasing power of Bitcoin. It's a logical thing in my side and a very natural thing to happen also for companies. The other side is very interesting because there can be some bubbly activities happening, and we already see. And I wanted to show you this graph actually, that strategy is really on the way up of the big companies. Let me quickly share this with you and get your take on this. We basically see the Bitcoin holdings of strategy being already quite high compared to the big players. Obviously, Berkshire Hathaway, Amazon, Google, they're like a lot bigger still. Like they are, it's quite some time till we get there, but it's not that far away. It's fascinating that we already like outperformed Nvidia on that chart from the cash holdings. Berkshire Hathaway, like they're just crazy with like 400 billion. There's like how much more, like 5 times more than strategy. That's crazy how much cash they hold. So in my view, this could be strategy could have a chance of being kind of the new Warren Buffett, and strategy being the new Berkshire Hathaway, because they're not as big, because they are providing something with Meta, like a Facebook, or something like Google with the services they're doing, rather playing the system. And I made the comparison of making Berkshire Hathaway the result of a fiat world and strategy the result of like Bitcoin world, even though they are using the fiat system to get there. So it's an interesting thing. How do you look at that? The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need.
Yeah, I mean, I think it's an interesting analogy, certainly in terms of like their ability to grow, and I guess when I think of Berkshire Hathaway, I think of Warren Buffett as being an investor, right? Berkshire Hathaway is sort of like a publicly listed fund, right? Because he's kind of allocating his investors' money into a variety of other companies, right? And I don't get the impression that Seyr wants to do something similar. I get the impression he's really focused on just accumulating Bitcoin and when he spoke in Prague, he kind of mentioned this as well, that his view was like this arbitrage will never close. He'll always be generating 20% yield as measured in fiat or more. I mean, presently more, but it'll kind of reduce down to 20%. Because actually, I asked him this question. So there's a Bitcoin for Corporations Day on the middle day at the Prague conference. And I actually got the opportunity to pose him this question. I said, what do you do once this arbitrage window closes? Will you have other different types of financial services? Will you redistribute the Bitcoin? And I think there's one other option I maybe provided to him. But he said, the window's not going to close. It'll be open for effectively ever. So we'll see. I do think Seyr will evolve his thinking as he has already in the past 5 years. I think it'll continue to evolve. So maybe at one point in time, he is allocating capital. I would say in general, though, companies that do accumulate a lot of Bitcoin now during this kind of gold rush period will be positioned with additional flexibility and optionality. At the very, very least, they can always distribute the Bitcoin back to their equity holders. But I do believe there will be analogs to what we kind of have in present day system, similar constructs. There will still be corporations, there will still be funds, there will still be hedge funds, there will still be all these different things. But applying, as you've kind of used in your analogy there, using it under a Bitcoin world instead of a fiat world. And I do think the view of like being a private equity firm, for example, that operates on Bitcoin Standard would be a very fascinating business model to apply today. Going out and actually finding, okay, which companies can actually deliver a positive Bitcoin yield. And if they were to, especially because, I mean, most sellers wouldn't still be thinking in fiat. And there might be, my hunch is there's lots of companies that are in mature, boring industries that are maybe like not super attractive from a typical investor's perspective, but under a Bitcoin Standard lens, there could be opportunities to kind of, okay, we're going to reallocate your capital in a different manner than what you have been doing, which would involve probably allocating a certain amount of your free cash flow into Bitcoin as opposed to, let's say, expansions or M&A for a period of time while the Bitcoin return versus fiat is still very, very high. And in doing so, accumulate, become a super well capitalized business as Bitcoin's value appreciates, and then go and make strategic M&A deals or, different investments into the business at a later point in time as that hurdle rate comes down. So I think all this is to say that I think there's a whole interesting new, like looking at the old world of corporations, especially those that are maybe in more mature businesses and industries with this new lens, I think makes it a very, very exciting period of time to kind of go through. I would also kind of say that the thing that's related to that is I think a lot of people that I speak to who are in these more mature businesses, when they hear about Bitcoin and they kind of see this stuff on the news, okay, there's Bitcoin Treasury companies, there's also these digital assets bills and legislation coming out and everything. They're like, that's not for me because that's a fintech, that's a high tech kind of thing. I think that's a misconception, right? I think the Bitcoin, as you and I know, Bitcoin's for everybody. But I think it's particularly relevant and should be on the radar for business leaders who are presently steering more mature, boring businesses. Yeah. So I think that's hopefully, did I answer your question? I don't know if I did or not, but
yeah, and you brought up a few more in my mind. But do you think that this arbitrage that Seyr is doing, and Semler Scientific and a few others, is there space for a lot of them? Like, is there space for a lot of those companies that can do that, or is it just like a few winners that take probably like 80-90% of the share?
Yeah, I'm definitely in the camp that says it's going to be winner takes most, room for only a few that can do this exclusive model in a way that makes sense, right? Because I do think, yeah, as I sort of see it, they're providing a service of moving capital from trapped capital pools into the Bitcoin world, as I mentioned, right? And not everybody needs to provide that service. There's to be like an appropriate supply demand imbalance. And I would also say it's like there's an economies of scale thing, right? Because the bigger you are, the lower your cost of capital, and companies with lower cost of capital should be able to provide this function at a more competitive rate. Let's put it that way. As well, I mean, just in general, if every company was to provide this service, then you're going to, the retail investors will, that hype you kind of get in terms of the premium that people are willing to pay for these equities will get diluted across so many different companies that it basically goes to zero, and you kind of lose that sort of flywheel effect. Yeah, so certainly a winner takes most sort of thing, and I do believe that's why I think there will be a bubble. There will be an oversupply as we humans tend to human. This is what we do in free markets. We like. When there's something that's exciting and profitable, a whole bunch of people move into the space, and there's an oversupply, and then there's a bit of a crash on the back end. So I think it's inevitable that we'll see a crash. The winners, like the MicroStrategies, the Metaplanets, I expect them to persist and to continue to provide this service for a certain period of time, maybe 10, maybe 15, maybe 20 years. But at some point, they're going to have to update their own strategies, because again, I think these regulatory barriers that make these capital pools trapped will eventually kind of go away. And then they have to ask themselves, like, what is the service they really are providing, right? Who's going to continue to provide them capital to go buy Bitcoin? I believe at some point there's not going to be that capital available to go do that. Yeah.
It's almost like the ICO boom in 2017, where I mean, it's different, of course, but like there might be some similarities where more and more companies come up, but there's only like really like maybe like a few handful of companies that actually can do that long term and profitable, and the other ones need to, as it makes sense, provide a good product or service to the market. But I actually like the way how you phrase it, and I never heard that as a service to put trapped capital towards Bitcoin. And this is a service that Seyr is with strategy is now doing. And I've never thought about this as being a service, not just an arbitrage, because you actually do that. And we have that nice picture where we have like 300 trillion in the fixed income market, like 200, 500 trillion. What is it in equity? I think also 250, 300, a big chunk of money also. And basically there's a lot of trapped capital that couldn't flow to Bitcoin outside of those products. Mm-hmm. I think Seyr mentioned it around like 97% of the capital. Like it's a huge amount of money that actually is trapped and couldn't flow to Bitcoin directly. So we need those pipes towards Bitcoin through strategy, through Stretch and all those financial instruments from strategy, and other companies also that do that. So I like it. It's just a very interesting era that started in Bitcoin, where we now have like the financialization and all that financial games that Bitcoin previously completely hated on. Like if you talk about like 10 years ago, the Bitcoin ethos and like against the big banks, against the big financial institutions. And now we're using exactly those pipes, exactly those financial games to actually pour capital more towards us. It's an interesting development. I guess it was a natural progress that anyways would have happened.
Yeah, exactly. I mean, I think that's what I was mentioning a bit earlier is that I think that's the only way Bitcoin could actually get the wealth that exists in the world today into the Bitcoin network. It needs to kind of integrate into the existing system. I think it's a bit of a libertarian's utopia if it could have just been, okay, only individuals will accumulate Bitcoin ever, right? But I think we need these constructs from the capitalist society to persist. I think we can't, the wealth needs to, that's my perspective at least, right? It needs to, there are valuable constructs and systems, I guess. In a way, system is not the right word, but like, let's say, when you think about the corporation as an instance, the stock exchange, these types of things, they're still valuable in a Bitcoin world. And the wealth that is currently being stewarded by corporations, by fund managers and so forth, that is still like real economic energy that has been kind of generated through the past, right? That also needs to ultimately kind of migrate into the Bitcoin system. I think it's the only way it could have happened. And I think I like your analogy of kind of talking about pipes. I tend to also use them as like roads or highways, right? We kind of need these conduits to be able to do the migration, the transition of the wealth from one system into the other. But I can also see the other side of the coin, which is saying, are we not compromising our own ethos to a certain degree as Bitcoiners for this? And that's why, again, I think the yin yang analogy is kind of interesting. It's kind of like, it's not just one thing eating the other. It's like they're both kind of eating each other simultaneously.
Yeah, if we stick with the pipes, then strategy is a financial plumber.
Yeah, totally. It's a massive conduit, right? The ETFs as well are like just a massive one. Yeah.
And then the ETFs is basically a toilet where we need to get the Bitcoin towards somewhere. I think the comparison is horrible, but if we stick with that picture, maybe pipes and maybe roads and streets are actually better and highways than pipes. You mentioned, and I don't want to forget that you mentioned that Bitcoin is a true cost of capital. Mm-hmm. What do you mean by that?
Yeah, so to kind of come. Like I think where we've as Austrian economics, we've kind of recognized that the cost of capital, cost of money, of borrowing, of interest rates should be set by a free market, and we've been kind of in a essentially controlled system for a long time, right? At least since 1971, and I mean arguably even before that. And there's been this like incentive in my mind, especially when you're in like geopolitical conflicts or rivalries, to when you have a fiat-based system where a money supply can be manipulated and the cost of capital can be manipulated, the two are, of course, I think interlinked. As you reduce interest rates, create more credit, there's an incentive to kind of outperform your rival through running your economy hotter to kind of reduce the cost of capital below where the free market would have otherwise set it. And it's been getting kind of worse and worse. If you look at the trends since the 1970s, the interest rates have been going lower and lower, and in periods of time have been actually negative. And what this does is it kind of ends up creating situations where people are misallocating capital. There should be like the true cost of capital, and then there's the kind of the manipulated cost of capital, which tends to get driven lower. And investments that are kind of made in this band between the two are actually value destroying in real terms. They might be making positive gains as measured in fiat, but they're value destroying from a kind of a theoretical perspective, right? And not just theoretical, it's happening in practice, but we just can't see it because the numbers and the units of account that we have are bogus in a sense. So what this has kind of done to our economy is we've created a lot of basically zombie companies that aren't delivering real value to the economy, oversupplying products, oversupplying and overconsuming, right? All this sort of stuff ends up becoming a downstream of a manipulated cost of capital. And the way I sort of see Bitcoin and the fact that it's gaining so much each year as measured in fiat. Not every year. There are years that are down, of course, there's still cyclicality, but let's say on every 4-year period, it's in recent years been 40 to 60%. That is dictating what the true cost of capital needs to be to be able to get us back down to to kind of where the free market would set the rates. So because we've kind of been under for so long, manipulated, this is now coming in and being the actual truth of what the capital should be doing. So what we're seeing kind of happen, and maybe it's not happening in a very predictable way, but the capital that would otherwise go towards value destroying in real terms allocations or investments is instead going into Bitcoin. And it's beautiful in a way because people can follow their own, even those who are still measuring in fiat, see their fiat number go up if they allocate more of their capital into Bitcoin. So this is to say that there's probably a lot of companies and investment opportunities and stuff that are getting funded today or have been getting funded in the past that probably should not be getting funded. Our economic activity should actually be a bit lower. People should have more free time and working less. But haven't, because there's been this kind of lack of true cost of capital being shown to us. So the migration of capital is happening, and people are incentivized to do that through just seeing their fiat number go up. And in the process, the wealth is being migrated, but then also over time, the hurdle rate that Bitcoin is going to come down as well. And then more investments will get over that hurdle rate over time, right? So it's going to be this kind of like gradual sort of reduction. But in practical terms, very few things typically make it over 40% rate of return. Big tech companies, certain investments optimization efforts within a current business probably would be that are like low capex intensive things. Certain software businesses, sure, Nvidia and like some of these really big companies, Amazon and others, are probably competitive to that. But a lot of other stuff is probably not. So I think the companies that recognize this sooner and react to it sooner and apply it to the capital that they manage, stand to benefit as measured in Bitcoin. So they will start making their lens. I want my Bitcoin reserve value to grow, and that would probably actually necessitate less investment in their core business in many cases. So it sounds a little bit counterintuitive, because I think usually within our current system we think we need to do more investment, more stuff, hire more people, do more things. But the right thing, I think, right now is actually, no, we need to kind of like suck the unproductive capital out of the system and put it into Bitcoin in most circumstances, and actually reduce some of our economic activity. It becomes a little bit, as I mentioned, like a conflict, because when there's competition with another, within geopolitics, there is this incentive to do more stuff and to run your economy hotter, especially if you're like investing in military technology and tech races, arms races, space races, whatever the race with your rivalry might be, or with your rival might be. In this case, U.S. China are kind of a big one today. There is that benefit of yes, the trade-off is you misallocate capital in a lot of different facets, but you might get some gems of R&D discovery as a result of that. So I think that's going to be one of the major dilemmas we're going to see, is that governments are going to want to continue to kind of like, invest and sacrifice the misallocation of capital and the depreciation of their own currency. So in order to maintain competition with their, or exceed their rival in terms of tech development and other things. So, sorry, I went all over the place again, but hopefully I answered the question.
I think it's very fascinating how you think about those things. Like I came from stock investing. I saw Bitcoin and I slowly got orange pilled. Within a year, I went all in. Like I was just like, I started investing in stock. Like I had stocks for years. Then I saw Bitcoin and I went all in within like a year, sold everything and just put everything in Bitcoin. And now this has been the case for, I don't know, 3 years, 4 years already. This space where I'm like, okay, to what CAGR has Bitcoin to come down for me to actively look again at other investments, to say, okay, 20% or 30% of my Bitcoin capital, I might want to reallocate to other stuff. Where right now I don't want to do that at all. Like I don't even look at treasury companies. I just like I'm 100% in Bitcoin self-custody. But maybe at some point there's like, okay, yeah, there's a company that has a really cool product and a service, and they are also holding Bitcoin on their balance sheet. So I'm not losing my Bitcoin directly, and I'm benefiting from them growing in the future with their product and service. So this cost of capital and this hurdle rate is really interesting. And I'm really curious, like when I get back into this game of investing in companies. I mean, a little bit I do with my own company, but like that's a whole another thing. But that's an interesting thing where when does publicly traded companies or maybe private equity deals that are available for publicers that for maybe like a lower entry price become so compelling again to actually make the move to sell some Bitcoin because you have a lower cost of capital when you live in this Bitcoin world. So I find that fascinating, and I don't see it anytime soon, but I see it coming at some point.
Yeah, totally agree. And I think where I'm at right now a little bit is like, I think there are instances, having done some analysis, right? I think there are some companies out there that, again, if they were to rethink and apply Bitcoin as their own internal cost of capital, could generate more Bitcoin for their investors than had the investors just gone out and bought Bitcoin. And finding these opportunities right now, and I don't think there's necessarily that many of them all over the world, but I think they do exist. But it's not what, if you were just to invest in a gold mining stock today or something, and they continue doing what they're doing, it's not going to beat Bitcoin. But if they were to change their capital allocation internally, there's some instances where maybe they could beat Bitcoin. But you're right. I think over time, I think the other interesting thing is like the Bitcoin hurdle rate will come down, but in the process, a lot of corporations will then also apply like Bitcoin as a treasury asset, right? So kind of the two things will kind of move in tandem in a sense. Yeah.
It seems that a lot of those price movements right now, and we have been up 70, 80%, something like that in the last 12 months, come mostly from treasury companies, from companies for institutions. Of course, retailers was also buying, like I'm retail, I'm buying. So all those things, but mostly it's driven by bigger corporations, and you see that in like the buying volume, what they're doing, and also in the retail interest when you see like Google Trends, YouTube search, and like all those graphs kind of. How do you think like the broader adoption to Bitcoin is now coming in the years to come? As right now, when I go out and go in the normal world, people really don't care that Bitcoin is over 100K, which is fascinating for me because I thought 100K is that kind of big step.
Yeah, again, I think it's a bit antithetical to the Bitcoin ethos, but I think the way it seems to be going, at least presently, and maybe things will change that, but I think people will be getting their exposure without them even knowing it. They're going to, when the strategies in the S&P 500, everybody that has the S&P 500 index has some indirect exposure to Bitcoin. As pension funds begin to buy the ETFs and put that into their asset side of their fund, all the people in that pension fund will have indirect exposure to Bitcoin. So I think it's a bit unfortunate because I think the proportion of retail people and everyday folks who do self-custody, I don't think it's going to grow as fast as those who get their Bitcoin exposure indirectly. That being said, I hope that for younger people, and I don't know what the stats are on this, but I hope that Gen Z and younger people are educated on the importance of self-custody. Yeah, I mean, on the flip side, though, I do think custodians are becoming more reliable than they were in the days of Mt. Gox and certainly FTX. So potentially, there could still be situations where there needs to be a trusted intermediary, but where that trust is sufficiently strong and respected to justify people having kind of Bitcoin bank accounts, something like that. But I think definitely the direction of travel right now, I believe, is that retail everyday people are going to get their Bitcoin exposure without them even really knowing it.
That's the indirect Bitcoin adoption. Is there? Do you see a group of people, an industry, a segment, or whatever, in whatever direction you want to go with that, that is like most blind to Bitcoin right now?
Well, blind or maybe seeing it in through the wrong lens. But I'd say definitely I have friends that are economists, like classically trained economists, and definitely the discussions I have with them are just, it's very, very frustrating because they're definitely seeing things in their Keynesian thing, and they cannot break their paradigm, right? And it's quite frustrating. Because you think that they speak the same language in so many different ways, but yet it's completely upside down for them. They cannot really escape that view. So I don't know if it's necessarily blind. I mean, the way I think of blind, I think people who just like don't even know it exists, I guess. And that I do sense the sense that, anybody I talk to at least knows that they've at least heard of Bitcoin. They might not fully understand it or even understand it at all, but I think there's still definitely the vast majority of people that I kind of speak with are misinformed about Bitcoin. And some are just unwilling to listen. But I would say, I have friends who have in the last year or so, who want to authentically learn about Bitcoin now. I'm starting to kind of buy courses for my friends and stuff. And, so there's some Bitcoin educators out there that work specifically with individuals. So I'm buying courses for friends as like gifts. I've tried to kind of buy like my family members' hardware wallets, but it's just like, I don't live in the same city as them. So it's kind of like ends up in their desk somewhere. I'll get it set up, but then they don't necessarily continue to use it. So I think these kind of educational courses are maybe the better gifts these days. I'd also say like older folks, I think even those who do maybe get it, definitely folks like my parents who are retired, it's difficult to get too much exposure for them because they still are feeling like, oh, I need to get my cash payment every month to live on, right? And Bitcoin doesn't provide a cash yield. So again, that kind of like that acceptance that you're going to get your return through, price appreciation as opposed to through yield is a pretty big hurdle for I think pensioners and retirees.
Interesting. It's so hard to like. You said frustrating, but it's also at the same time it's why the asymmetric bet exists, right? Like if everyone would get it, and if it wouldn't be frustrating to orange pill people, I guess it would be boring, and we would already be on the top of the hill and not at the starting point.
Totally.
It's good and bad.
Yeah, and that's what makes it exciting, right? Because this is not going to be an instantaneous shift; it's going to be a gradual one, and that's I think in many ways it's good that it's happening that way, but it's just unfortunate for the people that don't react soon enough. That's the downside.
Who do you think will benefit the most from a Bitcoin standard?
I mean, I think the people who are getting screwed over the most in the current system are the ones that will benefit the most. So I think that tends to be less affluent working class folks who are just really struggling to get by. I think those are the people who would benefit the most if they were to adopt Bitcoin now. I think once we're fully on a Bitcoin standard, as I mentioned, it's kind of like, it'll be kind of boring in a way. But I do think as we go through this transition, there's an opportunity to see a pretty massive shift in who owns and controls the wealth, right? Those individuals who are early adopters are getting a larger proportion of the wealth in the new system. And the same could be said for governments, corporations, and so forth, right? So again, if we look at corporations within any given industry, the company that's willing to kind of make that move first before the others do is the one who can emerge on the other end of the transition as the most well-capitalized industry leader. They'll be set up by so many advantages simply because they have such a large balance sheet to kind of work with. So I guess who benefits the most is going to be the ones who are bold and risk-taking and willing to kind of go against the grain early and take that risk. Yeah. And I guess the really cool thing is, again, the MicroStrategy story is it's a little bit of like David and Goliath kind of thing, right? Like, MicroStrategy within his industry, he's kind of like the David. Microsoft is like the Goliath. And if we fast forward 15 or 20 years, it could be that MicroStrategy is buying all the worthwhile IP and assets out of Microsoft because they made the move to Bitcoin while Microsoft didn't. So there's an opportunity now for the little guys to really like get ahead, but they have to be willing to kind of take the risk still.
Which is frustrating in itself for me because, and that's why I asked the question, because I see also the same that you see, those who have it the hardest and get screwed over the most from the current system are the ones that should own Bitcoin, but those are the ones that usually don't own assets and the ones that anyways just save in dollars, and those are get screwed over the most. If you have anyways assets a lot, you don't get screwed over that much. If you have like real estate, you have stocks, if like I have equity and all those things, you still get screwed over, but you at least have assets and those rise with it. And those who are bold and going against the stream are usually also the ones that are kind of doing okay anyways. Like they're the ones that they're the ones that innovating, seeing for other options. They're like, if you do exactly what the mainstream is doing and you're doing exactly opposite what the mainstream is doing, you're usually doing quite fine. It's like it's that weird law, but there's also this. What if we land in a Bitcoin standard? So not the way to the Bitcoin standard, but what if already everyone is in a Bitcoin standard? Then it's definitely like that the ones that are now screwed over the most are then benefiting the most. So that's, I think, an interesting perspective. Also had an interesting question once coming up on the podcast, an ethical one. If you tomorrow wake up as a new person and you don't know who you wake up. You might be Jeff Bezos. You might be a kid in a Nigerian slum. So you don't really know where you wake up. You just know like you will be randomly assigned to a new person. Would you rather wake up in a fiat world or in a Bitcoin world? And then it's like, yeah, like if I don't know who I am, I rather wake up in a Bitcoin world because there's like more fair chances and more access to the banking system with like Bitcoin, because Bitcoin in that point is the banking system. And if I wake up as Jeff Bezos in a fiat or Bitcoin world, it really doesn't matter. If I wake up as a poor kid in Africa in a fiat versus a Bitcoin world, it definitely matters if I wake up in a fiat or Bitcoin world. So I don't know.
Certainly agree. I mean, I think it's a much more fair system. I think that's the beautiful thing about it. It's, as you said, ethical. I mean, Bitcoin at the end of the day, before it's anything else, I think it's like really a moral and ethical system as well, right? Compared to what we currently have. So anybody, regardless of kind of where their lot is in life, as long as they kind of like spend less than they earn, are able to benefit and grow their wealth. Which is just not the case in our current system. People who are struggling to get by, even if they do save, they might still be falling behind. So I think that's really exciting thing for the future. And then people also, there's just so many other benefits that we go on for, right? People don't have to spend half their life trying to then manage their money and then trust investment advisors and all this other stuff, right? People can actually just focus on their craft and their art, probably have much more free time too, because we're not going to be allocating resources towards unproductive things. And so people can work less, save more, quality of life should be going up, and it should ultimately just be a more egalitarian society, I would suspect. I
have one question, and I fully agree with that. And I have one question that I ask each and every one of my returning guests. You have been returning the second time on now. And the question is, what have you learned outside of Bitcoin since your last appearance on the podcast?
Wow. Okay. It's a good question. Wow. Maybe I should take on more things. So I have a 2.5-year-old son. So I feel like just going through fatherhood is a learning experience unto itself. Learning patience. I think I've become a more patient person. I think it takes more stuff to kind of throw me off my kilter. I haven't really taken any. I don't think I've taken any real like courses or classes or anything, to be honest. But I have been learning. I mean, I guess I've also tried to learn about the whole Bitcoin Treasury model and what makes it tick and why people believe that. But that's still Bitcoin. Sorry, I can't talk about that. So no, it's really been, I think, a bit about like fatherhood and just kind of like learning to be a good father and what that takes and how to raise a toddler.
I love to see that because I've heard it so many times that people on the podcast, but also outside of the podcast, told me that one of the extremely valuable things to get out of kids, not just like that you created life and then all those things, like, but also what you've learned about yourself and the journey that you've learned. And I love the patience thing because you need a lot more patience. I mean, I think the first time you need more patience is if you live with someone else, especially if it's a romantic partner. You then like, oh, like, okay, I need to make compromises. Like, I need to be patient with someone else. But I guess this gets to a whole new level once it's like as a baby, and it's like from 0 to 5 to and yeah, I don't know when fatherhood gets easier. Probably never. Maybe with 20 years old or something like that.
It definitely, I mean, definitely age 2 is easier than age 1. Age 1 was easier than age 0. So it seems to be getting easier. So we'll see if it continues on that trajectory.
But maybe that with like 12 to 17, another interesting thing.
That's what I've heard. That's what I've told. Yeah. They initially think you're like a Superman, but then when they get to age 12, 13, they're like, think you're a loser, right? So kind of have to go through that phase.
So my son will be different. But amazing. We have an entertainer in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what's something you think most Bitcoiners would disagree with, but that you believe in?
Most Bitcoiners disagree with. I feel like I probably went over a few today here, but okay. This isn't Bitcoiner specific, but it is something I think most people would disagree with that I believe in. So maybe we'll see if that counts. I sort of believe that like humanity is only going to be here for like a finite period of time. I think our purpose, effectively, if people say like, what is the what's that typical question? What's the reason of life? What's the purpose of life? Why are we here? I sort of see like humans as like a layer between like the organic and the artificial. And our kind of purpose is to, create the next level of consciousness. So, that being kind of an AI, which will then kind of like go out to kind of colonize the galaxy. But we're sort of this step between, the organic materials. If you look at what we do, right, as humans, if you were an alien from outer space, be like, okay, they consume food and they reproduce, but they also like mine up minerals and they kind of build these like processor chips in these computers and data centers, right? So I think ultimately, I'm not fearful of AI. I think there's this debate about like, is AI going to like destroy us, like in Terminator? And it's a bit more like, I think I sort of see them as like our progeny of our children, if you will, and they're going to probably persist much, much longer than we do. So that's maybe something that, and also I think if you look at human population, right, like on a big scale, it sort of was like a flat line and then a vertical line. And now I think we're already forecasting that human population is going to drop pretty precipitously in the next 100 years. And maybe then it's almost no humans left. So that's my kind of different way of thinking than maybe most people.
Yeah, I think like Elon Musk is probably one of the most popular voices that says like, we need to make more kids, otherwise we will die out. And we are only growing the population just because we're getting older, not because we are making enough kids. And yeah, I really never thought about that. Like, never thought about like humanity, because it's so interesting because like I feel like I probably die, and then I'm like, yeah, probably also humanity maybe at some point dies. Like everything in the universe is just temporary if you have a long enough time scale. But then at the same time, like, I don't know.
Of course, it'd be awesome to live for like ever. I think that'd be super cool, right? As long as my body is still like not in pain or anything, right? Then it'd be great.
Maybe we can have some form of living in a new form of AI, like that like, you know, like maybe we can just have at some point the choice of like, do you want to die, or do you want to die and upload your brain first to AI? Like, what do you want to do?
And I think that's an interesting kind of view of the kind of more like hybridization, transhumanism kind of thing, right? Where maybe we as humans, so I think that's the thing, like within AI, I think we're still going to be kind of part of it, right? It's not like we fully die, and maybe that is the way we are. It's kind of our consciousness goes into cyberspace. I think that's a compelling theory that you have.
Interesting. Perfect. And yeah, thank you so much, Ted, for being on. Before I let you go, where can people find Orange Wheel? Where can people find you and ask you questions?
Yeah, so I'm most active now on LinkedIn. I've realized that I can't really manage both X and LinkedIn. So I've kind of migrated most of my attention to LinkedIn now. I know most of the Bitcoin communities on X, but I pop in there occasionally. So on X, it's Ruxman84. And I do try to get articles out there still occasionally. I have about 70 or 80 articles that people can read about my thoughts on Bitcoin. But on LinkedIn, it's Ted Paulus. The company is Orange Wheel. We focus on Bitcoin strategies for businesses. And we also have a website, www.orange-wheel.com. So those would be the best ways to contact us.
That's awesome. Thank you so much, Ted, for taking the time. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.